Hello. Welcome to this new stream, and we have the order chart for BTC. Nothing much for today because we had the weekend, and we are retesting this neckline. This is a potential order block and the peanuts reversal as well. So far no candle was able to go through this, and right now we are retesting this evening star. So let's see if this gets cancelled, and let's see. So we are in a regression channel, and we had this peanut. If we go from A to B, we have this reversal and this retest. And right here the market is try to stop it here and create a sideways price action. So I guess we can see a breakout of this regression channel, and with that breakout we can use this SR interchange. And we have some wicks here for volume burst. So let's see. Yep, that's it for BTC right now. We have 3 days left for the May 7th Fed raise announcement. Right now just building liquidity for that date, and nothing much. I don't think so there's anything to trade here. If you want, you can just go for a swing trade. I gave the analysis for gold, and the market is currently, so gold will open tomorrow, and we'll see how the analysis will turn out for the gold. So just giving a recap for the gold here. Somehow the drawing is removed, but you can find the analysis on the Discord server. I have posted in the gold analysis channel, so you can check that. So right now we have this reversal area, and we have this regression. With that regression channel we can see a SR to change. If this breaks out, if you can see, we have the evening star here, and evening star. If this works out, then we have this SR interchange of this, and we just can double it to here. But so far it's not looking like it wants to go for double supply. If it has to, then it wouldn't take this support here, and seems like the supply is exhausting. So let's see how this turns out. You have this retest area as well. So let's go on a minute chart. Before that, let's see how Ethereum is going on. Evening star, then I guess it's dial-ups is in creation. So nothing much for today, and because it's weekend there is no volume. Let's do some minute chart trades, and I'll be done in a half an hour. And before that, let's dive into a new topic today, which is the fair trading concept and what mistakes usually traders make which blow their account. Just give me a minute and I'll be back. Okay. So hopefully you can see the screen, and let me see. Okay, so in this we have a new topic here, and we have DMF concept. Which is BTC. Fair trading. So as a trader, you make a few mistakes as a new trader. So what are those mistakes you make? So the first mistake, and one of the most common mistake, is using all your funds and investing. Investing all funds at the same time. So this is one of the biggest mistakes investors make, and which is the using all the funds at the same time. And this is one of the most common mistakes I have, and I also did that. So I had these like emergency savings of like $4,000, and apparently I invested all of that because I wanna get rich quick overnight. And that not work like magic, and you can become a millionaire and you can compoundedly make profits over your investment. That's not how it's gonna work. So the first and the foremost mistake is never invest all your funds at the same time at the in the early stages. And it's not like you will invest and you won't trade. So that's a big myth, that you will invest into the broker and you wouldn't make the other trade of it. So if you have $4,000 as an investment, you think that 4,000 something you want to go with, So you have 4K as a leisure investment. Leisure money. And you want to invest into futures. You want to invest into futures. So you have to do it in a very sophisticated manner. So first you have to invest only 15%, and once you're able to get profits, so this is the 15% investment, and you have made 2x over this investment, then you have to go with 30%. Same, you have to make 2x of it to have a total amount. So let's suppose you have invested 15% of 4,000. It will be 15% of the so you have invested $4,000, 15% of the $4,000. Approximately you have invested $800, and you got the return of 1,600. Then you have to pull the profits from here, which is $800, and out of that you should invest 30% remaining, and then pull out those profits into this. So 30% of the 4,000 will be, so we invested for 800, so remaining you have 3,200, and with that being said, you should have $960 here, and with that you should invest, you should get return of multiply with 2, should be almost $2,000. So this is how you should be investing and keeping that in the profits. So you have to do it in a split way. So you have to split your profits, you have to split your equities as well to become profitable, and to not go for just one. So you don't have to go for the one mistake and you have to blow up all your account. You have to be very sophisticated when you are investing money into the futures account. So that's the one thing. You don't want to have to invest all the profit at once. So I hope that this is clear. Now comes to the another part, which is second is over leveraging. So second topic is leverage. How much leverage should you be taking? So if you want to make money, the only way is to increase your leverage or increase the risk and reward. So there are two ways. So the first is increasing risk and reward. The second is increasing leverage. So with risk and reward, let's suppose the market is at 74K all-time low, and you trade at this point, which seems to be like most like a viable entry. So you put the trade here and you took the profits at 90K. So that's a huge risk and reward. Now comes on the leverage. So with leverage, you want to make money fast. So you took a 200x leverage on 2% of your balance, which is the standard. You should only be investing 2% of your balance. So the 2% of your $4,000 balance, let's suppose you have $4,000 balance and you want to invest 2% of it, so you will have $80 per trade. And with 200x leverage, you can make around $800. Supposedly you are making $800. So that's a good margin you have. So with both the techniques you can make equal amounts, but it doesn't matter until unless you have the right skills and the right knowledge. So going on the first day with the 200x leverage sounds like silly. So leverage depends on two things. You have enough experience in the market as the first thing you have, and the second thing is you have capital. So why you have to have capital? Because the normal like the fair trading concept has this, because it has two ways of leveraging. One is isolated, and you already know that we have two kinds of leverage in futures, and another is cross. As a fair trader, you have to go with the cross margin only, with 2% balance or 2% trade balance of your total capital, and your experience in the market should be around at least 3 years. Then only you can go for the 200x leverage. Otherwise, what will happen? So usually what we do is we took a high leverage, we have the bad entry, and since we know that it's a bad entry, we don't know where the market is heading, we don't know about direction, because we don't know about how the market works, how the concepts work, how the fake outs work, and we don't know the direction. So until unless you know the direction of the market, and all of these comes from the experience itself. Direction, fake outs, entry. You won't be able to find yourself into a profitable situation because you don't have enough experience, you don't have enough capital for the cross leverage, so you won't be able to make 2x of your capital. So you should be not over leveraging. So that's the second mistake that usually traders make, and I also did. Now the third is the first is capital, the second is leverage, third is learning. So until unless you know how the market works, you know how to have your stop losses, how to know direction of the market, you're not able to learn. So learning and experience is a must. Let's keep it fourth, and the third can be the stop loss. So mostly new traders does not have the stop loss when they're trading. So the third should be the stop loss, and it should have sufficient stop loss to make an entry and be in a profitable state. And if unless like let's suppose your direction is wrong, you didn't enter the right position and you didn't have the right leverage, so still there's a stop loss that will help you to not blow your account, and that will make you get rid of the big losses. So taking the small losses is okay. So if you're taking 1% loss over your capital, it's fine. But if you're going for 20% capital, what it will do is it will emotionally break you, and the after effect for this will be because of the emotional outbreak. You will be investing more capital, like 20%. So you will become a redundant trader, and you won't even know what you're doing. So you don't have to be in a situation where the emotions are controlling you more than your skill set, more than your mindset. So that's not the situation you should be in. That's the third point. And the fourth is learning and experience. With learning experience, you can increase your margin, you can increase your capital, you can increase your leverages. So all depends on your experience, all depends on your time in the market. So that's a very important thing. Now, so you know about the capital, you know about the levers, you know about the stop losses, and you have enough learning and experience. And with learning experience comes with demo trading. So you should give at least 6 months to demo trade. And doesn't matter what capital you choose, doesn't matter how much funds you have in the demo account, unless you have 10 wins continuously, constantly, you can start. So 6 months of demo trade, then a test of consecutive 10 wins, and then that's how you will proceed with the real account. So let's suppose you have taken the first trade, you won, another trade you won, third, fourth, fifth, sixth even, and then you lost history. So that's where the capital should that's where the challenge should end, and you have to start again. Then you lost again, then you have to start again, then you have to go again, then you have lost again, then you have to start the whole process again, unless you have 10th win consecutive. Okay, so that's one of the major concepts you need to learn when you have to start your trading career. So whatever concepts you learn, whatever research you have, you need to backtest everything. So with this, you need to backtest your strategies. Even something I am telling about, let's suppose spin ends, let's suppose SR interchange or a trap, doesn't matter. You have to backtest those strategies unless it will work for you. Then you have to try it on the real account. So you have to backtest each strategy 10 times at least to do it on the real account. Okay, so that's with the fair trading concept, and we'll discuss about this more in detail later. Okay, so let's get back to the chart. Let me check. I don't know why you guys can't see my screen. It's fine on this Streamlabs, but okay. Let me turn on the display. I guess really fine. Okay, I hope so you guys can see the screen. So the fair trading concept, we have four steps you have to go through. The first is about the capital. So the first is the capital. You have to have split capital. So by splitting, I mean that let's suppose you have $4,000 of the investment you want to make into trading. So you need to split into 15, 30 and remaining. Okay. And with each split you should have compounded profit. of 2x. So if you're investing $800, let's suppose you invested $800 in the first split, you should have $1,600 as a payout. And that $800 comes into this $4,000 total supply. And let's suppose you won't be able to make $800 and you lost all of it. Then you can invest another 15% and restart this. So yeah. Now comes to the second, which is leverage. So how much leverage you should be taking? The leverage depends on the skills and time in the market. So let's suppose you have been into market for 6 months and you go on a demo trade, which comes with learning experience. In this topic you will get in the info of demo trade and how you should be demo trading or paper trading. So you took a challenge, and with the challenge you have 10 wins. So you made like 6 wins out of 10. So you can have 60%, 60x, say go for 30x to 60x leverage only. You have 6 months of the time. You have invested, you have 6 wins out of 6 wins out of 10 wins. This is leverage you should be taking. Let's suppose you got only 2 wins out of 10 and your market time also be less. So 2 months was the active market time. So leverage should be only 5x to 10x or 20x. That's the leverage you should have. So, and stop loss should always be there. As a fair trader, you should have the stop loss with every trade in place. So let's suppose your entry was not great enough, it went into wrong direction and you're now in the loss. So with stop losses you have limited loss and you can take another entry if you feel like. But since getting a small loss doesn't make a difference, makes a lot of difference actually, and having the stop loss is a very viable way of trading. So before drawing down your account to the zero, having your stop loss is one of the most prominent things you should have. So you must have a stop loss. And a stop loss should be 1% of your trading capital. So if you took a trade for $80, so let's suppose you took a trade of $100, your stop loss should be only $10, and which depends on the leverage itself. So you will come to leverage and you will see how much leverage you have. Depends on that. You should have the SL. So if you have 200x leverage, let's suppose when I take 200x leverage and this is my entry and my stop loss should be this small, and this comes with this risk and reward. So I have a short entry here, short 200x. This is my risk, this is my reward. So this should be my stop loss, and this comes with time. It takes like 2 years at least, 2 to 3 years to get some kind of return like this. So all depends on the time, all depends on the skill set you have. So if you are able to learn this quite fast, then you can do it within 2 years or 1.5 years even. But still, you should have enough time. You should be able to give it time to invest into the market, and you should be able to give time to backtesting as well. So when it comes to backtesting, so backtest each and every strategy you have, and backtest concepts, backtest high frequency trading. So backtest all the strategies in a demo account. And doesn't matter what capital you have, how much funds you have in your demo account, all depends on the trade wins. So I gave the challenge for myself to have like 10 wins consecutively. So unless you have 10 wins, let's suppose you have started challenge, you got the first win, you got the second one, you got the third one, going to the streak, fifth, and at the sixth point you lost it. So the challenge should be restarted, and with this you should restart, and then again you have lost, then you should restart your challenge unless you have 10 wins, 10 consecutive wins. You can go into the real world of trading. That's how it should be, and it would take you 6 months. It doesn't matter, like I don't care if it takes you 6 months or if it takes you 6 days to have that. Well, 6 days it's not possible, okay, or it takes you 6 years. I don't want you to invest unless you have 10 consecutive wins, okay? And doesn't matter what chart you have, it doesn't matter what time frame you have, it doesn't matter what kind of broker you have to go with this fair trading concept, and you have to fulfill these 4 points. So you have to split the funds, then you have to increase the leverage with the time, and take high leverage with the time, and always have a stop loss. And fourth thing, and the most important thing, is having a demo account and trade and backtest your strategies continuously on that. So yeah, so that's with the fair trading concept. We have four concepts here. The first is capital, the second is leverage, the third is stop loss, and the fourth is learning and experience. So it takes mindset, it takes time to have a risk and reward like this, and it doesn't matter how much time it takes, it will be worth it at the end of the day. And because trading gives you the freedom, trading gives you the advantage over the others, so it takes a lot of emotion, it takes a lot of time as well, and there's no quick rich scheme into this. I have been there, done that, and I have made these all mistakes unless I knew that these are the things you should be going with. This is my 4th year, and it's been a long journey. So you should go with the four concepts before you dive into the real trading world. So if you have any questions, you can just let me know in the YouTube comments. And sorry for the white screen, blank screen. Since I had most of the focus on this lecture, I wasn't able to see it, look over that. I hope this is you have understood this concept. see one thing, we have this volume expansion. We have the morning star, and if you combine these candles, we have the bullish engulfing here. Then we have the hammer, and actually this is the hanging man because we are at the top of the market in this time frame. So if the hammer comes here, we have if this candle comes here on the bottom, we have the hammer. But if it's coming on the central zone or the top of the demand, we'll call this as a hanging man. Hanging man is a bearish candle, and when the market is struggling, it creates a hanging man on the top or at the central zone. So here we have the bullish engulfing. Let's see, and we will call this as a shooting star. So this shows that we are at the central zone. So at the central zone, as per the DMF concepts, we won't be trading at the central zone. We will wait for the market to come to the resistance or the support. Let's suppose if we take a trade here, and this is one of the biggest mistakes of the new traders. So then they don't see the stop loss. So our stop loss will be this big enough. Doesn't matter if our risk and reward is this big. This big of a stop loss can create a loss of direction, loss of awareness of the market. So it's never recommended to have this big of a stop loss. This is why I always encourage traders to not trade on the central zone. So this was the total supply, and see here. We were able to push this through the central zone. So this can be market shift. We can call this market structure shift. So demand is increasing, and let's see if it's able to break out this key resistance. So here, if it makes a double bottom here on the central zone, we can take a trade and trail our stop loss till the resistance, because we will have two confirmations, and with that our stop loss can be more concrete. So this should be our stop. Also here the market has gap, so this is the volume fill up area, or you may say retest. Market always tries to fill these gaps and fill these wicks with a body. So took a trade here, and with this trade we have the retest, so that's one good thing. Then 1 second. We saw that hammer is always trying to give us a volume burst, so the same candlestick pattern came here, and this is the concept of repetition of candles, so ROC, which comes under DMF concept, and the DMF is dual market framework. So with this candle pattern, I took this trade with this stop loss. So with the fair trading concept, we have the stop loss, so we had the concept one completed, and then we have the trading stop loss here, and then we'll extend this trading stop loss till here, and we have the TP as well, 50% TP right here. So always take TPs, and here you can take like 70% TP here. So take 70% TP right here and trail your stop loss. And here we have the volume fill up, so we can see a resistance. And now you are seeing we are having some bearishness from here, so the pressure is coming from here, so we can close the candle here, close the trade here, and trail our stop loss to here. Okay, so far so good. Since this resistance has been broken, so we can counter this resistance with this supply. And look for this total demand. So it will retest again to these resistances. So looking for the retest, and then we'll go for the another entry. This should be my stop loss, and this hammer will be the confirmation. And as per the DMF concept, we have the 50% area for all the reversals. So I mark this 50% area of this total demand. So my mic was off. So I was telling that we have, so how to spot the trend reversals and how to know if the trend is getting exhausted. So here we had this large big bar candle, and then we have two candles which are small, and then we have another candle like this. So by adding the liquidities of these candles, we can see the absorption of this last candle we have. And here you see we have right at the end of this box, we have the rejection. So this is how you have to see the trend reversals and how to spot trend exhaustion. Okay. So I'm waiting for the retest to this resistance to go with this long trade to the SR interchange. Again, I'll do the same thing. I will take 50% profits here. And this just to explain the fair trading concept. You have the stop loss, you have the split profits. So if we get the stop loss, we will still be in profit. And just close this here if you want, if you need. Since we're in an uptrend, so it will take some time to get to this level. And same is happening. We have 50% area of this. Here we go, almost at the take profit level and second win. Patience is the key in trading, and you have to wait for the right candles, and you have to wait for the trend exhaustion. All we need is a volume burst here, and I guess we can have it. "30 seconds left." Whenever these candles, whenever you see candles like these, this means that the coming candles will be the volume burst. the market just tries to accumulate the liquidity with these candles. Usually it takes like 2 or 3 candles like these to see a volume boost. And we have a hammer. Okay. And here we go. So we'll hop on the next candle. This is a good volume boost. Like this is a good hammer for volume boost. Let's see. Hopefully it does not fails out. Okay. And we're in. And if it fails out, then we can see a double supply and can go for a short. Almost no volume. Okay, hammer is failed, I guess. 20 circle left. I'm going to trail my stop loss to here, and if we don't see a volume here, then I should exit the trade with this stop loss. Finally, we have something. I will cut some stop loss from here, so to get rid of the fees I'm stopped out and just make it the break even. So I'm gonna end this stream here, and we had three trades and all of them were wins. This will be ongoing till 95,830, and we'll see. Okay, so I should have my like 60% profits booked and trail my stop loss till here. Okay, so yeah. So I'm off for now, and I'll be back tomorrow same time on Monday, and have a great day. Bye bye.